Hello everyone, my name is Lachlann. I write for Money Morning and I'm also an analyst on Exponential Stock Investor. Today I will be talking about the buy now, pay later sector on the ASX, and I've got the Afterpay share price chart here, which I'm sure a lot of retail investors will be watching closely. There's a big question as to whether or not this is a bubble, and it's certainly not the Dutch tulip craze, and it's probably not the Bitcoin bubble either. But there is the potential for a pullback, and in this video I talk a bit about risk management and stop losses in the buy now, pay later sector. What we have here on the screen for you today is the Amazon share price from its IPO in 1997 through to the dot-com bust. Now, as you can see, it had an immense run up, over 5,000% gain, and then if you'd set a stop loss at about 20% of that gain, you would have looked like a very intelligent investor after the dot-com bust played out. But we all know what happened after this. The Amazon share price went on an immense run, and it went all the way up to about $3,000 where it is today. So I've got a little arrow in there saying what dot-com bust. Well, this is where risk management and stop losses are very important. And so I'm going to run you through a few charts here from the buy now, pay later sector. So this is the Afterpay share price. You can see it smashed through resistance at about $40 there. And it's up more than 800%, at least from the March market lows to the recent high. And it's since retraced as they've had a capital raise and some director share sales. So how do you go about picking where to put a stop loss? Well, this is a question that really has to do with your risk appetite. And there's one tool you can use to set a stop loss, which is a Fibonacci retracement. And I'll just do that on this chart of Sezzle right here. So here you have potential Fibonacci retracement. I won't go into what a Fibonacci retracement is, but you can learn more about it on a variety of different outlets. But the main idea is it gives you some levels at which you can set a stop loss. So from the March market lows to the high recently on 9 July, you can see some resistance that it punched through here. And then it gives you a set of levels at which it could retrace to. Now, one option is to set a stop loss somewhere just above one of these levels, which you can see it's getting close to hitting now. Or you could set a lower stop loss. Again, it really all depends on your risk appetite. Now, the reason you set a stop loss is so you can lock in a gain. Now, one of the points I make in the article is it's not a gain until you sell. So that's one thing to consider when you're investing is, do I let this ride or do I keep going? And again, taking half profits is another strategy. Then moving your stop loss up, that's one thing you can do to sleep better at night. Now I'll just take a look at the split at share price here. I've done the same thing with the Fibonacci retracement. You can see it bounced off the 0.382 level there and has since gone up and then is retracing again. Now, where do you set a stop loss here? Well, there's so many things to consider. You can see Split did quite well early on after its IPO, and there would be some levels of resistance that you could draw in based on that previous run up. But I'm just using the current rally as an example of where you could set a stop loss. One example stop loss would have it somewhere around there. You know, there's just one potential option for a stop loss. And I'll just take one final chart into the mix. Now you've got some resistance there that it went through, and then you've got two potential stop loss levels there. So this is just one way to look at banking gains after you've invested. And it's very important to set a stop loss on a number of your trades because you don't know if it'll go up forever. Now, the buy now, pay later sector, there's a lot of debate as to whether it's a bubble. Goldman Sachs, for instance, reckons that Afterpay's user base will grow 5-fold in the next decade. Now, is that priced in or not? It's very hard to say. And one of the things about investing in these companies is that they may go on to take over the world or that may not. But in order for you to sleep better at night, it's important to take these stop losses into account and build them into your risk management strategy. And so that's all I have for you today. And I hope you enjoy the article. And you can learn more about trade stops, which is an algorithmically calculated way of approaching stop losses, in the link in the article. So enjoy, have a safe weekend, and I'll talk to you soon.